Welcome back. Now, Brait has had a tough year, reporting an 8% decline in its net asset value per share. Despite this, the investment company managed to narrow its headline loss per share to 13 cents as its investee companies performed well. And joining me as we take a look at the year that was for Brait is CEO Peter Hayward-Butt. Thank you so much for your time, Peter. Now, in terms of the bottom line, you are still in a loss-making position, even though your loss narrowed. But even with the key metric of NAV per share, that dropped by 8%. What weighed on the performance here?
Yeah, thanks very much, and good evening to your listeners. Well, in terms of what weighed on the performance, I mean, it was partly due to the fact that we used to value Premier as an unlisted business before we listed it last year, and obviously then marked it to market. So there was an element of that. Because actually the underlying assets, and there's only 3 underlying assets remaining in Brait. That's really the Virgin Active business, Premier, and then New Look, which is a fashion UK fashion retailer. Actually, all 3 businesses performed really well, to be honest. So overall, I think we were generally pleased. Obviously, we have a significant amount of debt, which will be repaid, some of it through the recapitalisation. And obviously, the cost of that weighed on the NAV per share for the year. But overall, the performance of the 3 assets was pretty pleasing, to be honest.
Yeah, well, let's actually zoom into Virgin Active. Of course, you mentioned the recovery that we are seeing there. How far are you in terms of where you were pre-COVID? Just talk to me about that performance.
So from a membership basis, we are relatively similar to where we were before. We've got over 1 million members, and I think we were at 1.1 pre-COVID. So broadly back to where we were. From a revenue perspective, we've exceeded pre-COVID numbers because obviously the yield on those memberships has increased. And then from a profitability perspective, the business used to make around about £140 million a year of EBITDA pre-COVID.
Yeah.
It's now back to a run rate of around about 80. So it's not all the way there yet, but it's certainly significantly better year on year than it has been over the last 3 or 4 years during the depths of COVID.
And of course, there have been discussions about Virgin Active's potential separate listing. How much of a priority is that separate listing of Virgin Active, just looking at the performance right now, and what does it really hinge on?
So the strategy for Brait is to monetize the 3 assets that remain. As I said, New Look, Premier, and Virgin. We listed Premier last year to enable us to do that, and that I think has been largely successful. The New Look business we would probably look to exit over the next 12 to 18 months, which would leave then the last asset, which is Virgin Active. I think a listing is probably the most likely exit for that business. What do we need to achieve that? Firstly, I think getting back towards that 120 to 140 million pounds of EBITDA is a short-term focus for the business to get there. Once we achieve that and we pay down the debt to more sensible levels, and again, I'm talking about in 18 to 24 months' time, I think it'll be a great business to bring back to the market. I think by then, the international component, the non-South African part of the business, will probably be 65% of the overall profitability. And I think that'll give us the ability to see this listed probably on an international bourse and get a wider audience of investors who could be potentially interested in investing in the business.
Yeah. It's quite interesting also that you talk about New Look and basically the intention of exiting that investment in about 12 to 18 months. There are a lot of headwinds there. Does it need to change its look in the meantime as you are working to exit that investment? And also, what shape would that exit look like?
I think the exit of New Look is predicated on 2 things. The first is, having the business back to a sustainably profitable level. And I would suggest last year the business made £40 million of EBITDA. This year it's made 42. So it's back in a sort of sustainably profitable business, which it wasn't obviously during the middle of COVID.
Yeah.
I think the other thing that needs to go right if you want to sell the business is to ensure that the macro environment is more susceptible to selling a business. I think we're starting to see the early green shoots in the UK of that, consumer spend, consumer participation in the economy. Hopefully interest rates start to come down at the back end of the year and consumer confidence returns to the market. I think that'll give us a much better environment to sell that business. So we're hoping that broadly this time next year, we'll have a business that's sustainably profitable and we'll have an environment that enables us to sell that business.
All right. That recapitalization plan, what are the key pillars of that, and in what position do you hope that it will put you on?
So the recapitalisation, our debt, we've got convertible bonds and exchangeable bonds, which is, two forms of debt in the business. Both of those matured in December this year. So we needed to get an extension from our stakeholders, the convertible bond and exchangeable bond holders, which we managed to do. We've extended those out by 3 years on broadly the same terms as they are today. And as part of that, we will raise 1.5 billion rand in a rights issue from ordinary shareholders to help fund the business and the growth in the underlying investee companies, to enable us over the next 2 to 3 years to find the right window. It's not necessarily in 3 years' time, but over the next 2 to 3 years to find the right window to sell those assets into and to optimize the return for our existing shareholders.
And also just in terms of corporate action, Ethos yesterday did announce that it will be unbundling its stake in Brait. How should shareholders be looking at this?
So as most people would know, in November last year, Ethos Capital announced that it was going to wind itself down, i.e. start to sell the underlying investments and return the value to shareholders. So it wasn't in a position to follow its rights under the Brait rights issue. It's around about a 10% shareholder in Brait. The Ethos Capital shareholders were extremely keen to participate in the Brait rights issue and ensure that they weren't diluted. So the only way to do that really was to unbundle those Brait interests, the ordinary shares, back to the Ethos Capital shareholders to enable them to participate in the Brait rights issue. And I think they will be very supportive of Brait going forward. They like the asset. They don't want to be diluted. So it really was a mechanism to put those assets back into their hands and enable them to participate in a rights issue with Ethos Capital.
Well, thank you so much for your time, Peter. That was CEO of Brait, Peter Hayward-Butt.